You're watching The China Show. I'm Annabelle Droulers with David Ingles, taking you here to some live pictures of Donald Trump in the Oval Office.
Yes, and it's been an extremely busy last couple of hours or so. We've come, of course, coming out of the inauguration, and right now, of course, for Donald Trump is President Trump signing a series of executive orders over the last, I would say, 30 minutes or so. And, you know, among which, I think most materially for markets is really a date now being attached to potential tariffs on Canada and Mexico, and really the reason why we're seeing this massive reversal in the dollar weakness we had yesterday coming into this morning, though.
That was the whole story. I mean, it was, of course, that big question mark of tariffs, and there was that sort of sense of relief coming through markets because we had that pullback in dollar strength when it was sort of that understanding, okay, they're not going to be immediate, and it's going to be first a study of what exactly should be happening. We've just had that line dropping, though, that Trump is thinking that he might enact tariffs on Canada and Mexico, of course, the two biggest trading partners, on February 1. And we are seeing a very sharp and market reaction to that off the back, particularly watching what's happening in the Mexican peso here, the Canadian dollar. Again, you're seeing that weakness coming, but this is really a reversal of sorts because you're essentially peeling back the gains that we had yesterday. The euro as well under a little bit of pressure, and we have been actually tracking the VIX because we had seen that retreating a little bit, but that is the last close there. We can take a look at futures as well. Broadly in the Asian equity space today, we're also
well, I was going to say
exactly what's happening because we have sort of seen, reversal really. We've now got Asian equities a little bit under pressure so far in the session. We've seen US futures as well turning negative, and again, it's all that story around dollar strength. What does it mean for yields? Because we had that expectation, okay, maybe inflation, those concerns are pushed down the road a little bit. Yeah. Maybe the Fed can stick with its easing path, but again, just a few minutes into Donald Trump back in office, we've already had a reversal of sorts.
Yeah, we've been hopping between July and June meetings from the fully priced there out of the Fed. I mean, quite literally when I say this and figuratively, everything is on the table right now. So when you talk about tariffs, for example, we're looking at that, the market reaction to that as well. Some of the other things that he signed this birthright, to end birthright citizenship. The reason I bring that up is, among other things, Greenland might be on the table. Let's listen in.
That would be worth, could be $500 billion or something. It's crazy. The numbers are crazy. But it's worthless if the president doesn't sign, then it's worthless. If the president does sign, it's worth maybe $1 trillion. So I think, like a joint venture, I think we would have a joint venture with the people from TikTok. We'll see what happens. I mean, that's one of many ideas I've had.
The CEO is now. Did he say that he's open to that idea?
Who?
The CEO of TikTok is around.
Oh, I think he'd probably like it. Because he's got nothing. I mean, they really have nothing. It's passed in Congress. It gives the president a right to make a deal or to close it. And we have 90 days to make that decision. But I could see making a deal where the U.S. gets 50% of TikTok, polices it a little bit or a lot, depends on them. But remember, they make telephones in China. They make all sorts of things in China. Nobody ever complains about that. Here they're complaining about this. There's so many different products made in China, and nobody ever complained about it. The only one they complain about is TikTok. And TikTok is largely young people. I guess I have a warm spot for TikTok that I didn't have originally. But, I went on TikTok, and I won young people up by 36%, Peter. And Republicans typically don't do too well with young people. But it's a different Republican Party.
Would the U.S. government buy a portion of TikTok then, or how would it get that 50%?
No, you'd take 50% of TikTok for the approval that TikTok could continue in business. And they'd have a great partner. The U.S. would be their partner. But the U.S. essentially would be paid for doing that half of the value of TikTok.
Would there be a private sector owner as
well?
Could be,
yeah, could be a lot. Tell you what, every rich person has called me about TikTok.
You wanted to block TikTok. Why did you change your mind?
Because I got to use it. And remember, TikTok is largely about kids, young kids. If China's going to get information about young kids, I don't know.
Are you
I think, to be honest with you, I think we have bigger problems than that. But when you take a look at telephones that are made in China and all the other things that are made in China, military equipment made in China, TikTok I think TikTok is not their biggest problem. But there's big value in TikTok if it gets approved. If it doesn't get approved, there's no value. So if we create that value, why aren't we entitled to like half?
Sir, if they don't take it in 90 days, will you shut them down?
Does Biden ever do news conferences like this? How many news conferences, Peter, has he done like this?
Like this?
None.
0.
And it would be 0 for the next infinity. For infinity, it would be 0.
Mr. President, when you plan to talk to President Musk, going to help implement the executive orders? I think you mentioned implementation in your
Elon, no. Elon's very busy sending rocket ships up to various places with lots of satellites on them.
What is your reaction to the confirmation of Marco Rubio, and what does it mean for Latin America?
Which one?
Marco Rubio.
Marco Rubio. You said Marco. Marco
Rubio.
Yeah, I think he's great. I think Marco's doing a fantastic job. I think he's going to get a lot of votes. I think he's going to be at 90% or something. I mean, I'm hearing very good. People know him. They know him in the Senate. They know he's good. He's doing a good job. I don't know. I can't tell you. I don't know what's going to happen with that. He's got some very strong ideas, though, Marco.
You signed the TikTok order, right?
President?
Did you sign the TikTok order?
Yeah,
Yes, that was just signed.
Marco Rubio's ideas is
just signed it.
How many did you
still
sign?
changing
Are you going to
Venezuela,
sign?
changing power. Are you still committed with Maduro leaving power in Venezuela?
Well, we're going to find out about that, too, because we're going to probably stop buying oil from Venezuela. We don't need their oil.
Another embargo like the first term?
Well, it could be, but we don't want to buy. We don't have to buy their oil. We have plenty of oil for ourselves, so
President Trump,
that'll change Venezuela quite a bit.
President Trump, there was a lot of concern about this during the campaign. A question that only works today. Are you a dictator on day one?
No. I can't imagine even being called that. No, I believe in the sanctity of the vote. The Democrats didn't because they cheated like dogs, but I believe in the sanctity, and this was too big to rig. This last election was just too big to rig.
Mr.
But
President,
no,
We believe in climate
really
change.
the opposite.
when do you plan to speak to President Putin?
Could be very soon.
And you talked a bit about Ukraine and Russia, but how long do you think it would take to end that conflict? And
I have to speak to President Putin. We're going to have to find out. He can't be thrilled. He's not doing so well. I mean, he's grinding it out, but most people thought that war would have been over in about 1 week. And now you're into 3 years, right? So he can't be thrilled. It's not making him look very good. Now, eventually, I mean, it's a big machine, so things will happen. But I think he'd be very well off to end that war. We have numbers that almost 1 million Russian soldiers have been killed. About 700,000 Ukrainian soldiers are killed. Russia's bigger. They have more soldiers to lose. But that's no way to run a country.
What did your TikTok order do, Mr. President?
Just gave me the right to sell it or close it. Essentially, with TikTok, I have the right to either sell it or close it. And we'll make that determination. And we may have to get an approval from China, too. I'm not sure. But I'm sure they'll approve it. And if they don't approve it, it would be somewhat of a hostile act, I think. But it's good for China if it gets approved.
Mr. President, you're not guaranteeing that TikTok will be around after 90 days from today?
No, but it could very well be. It makes sense for it to be, because it's got tremendous value. But if we create the value by approving, in other words, that approval gives it tremendous value. If that's the case, then we should be entitled to 50% as a country. You understand? You haven't heard that one before, right? That's called a joint venture. And nobody ever thought that way before. Well, I don't know. I think you have a lot of people that would be interested in TikTok with the United States as a partner.
Mr. President, what was it like walking into the Oval Office this evening?
Oh, what a great feeling. One of the better feelings I've ever had.
Do you like this town better now than in 2017?
Well, we're very experienced now. You would say nobody's ever had experience like I have. I've dealt with some very good people. I've dealt with some very bad people, and I know who the bad ones are and the good ones are. Don't forget, I was very successful in primarily the real estate business. And people used to say, who's worse, a politician or a vicious real estate developer? And I'd always say, the real estate developer is far worse. But after about 3 months and getting to know scum like Adam Schiff and other people like that, I said, no, actually, real estate people are quite nice by comparison.
You said you plan to speak with President Putin soon. What about President Zelensky, and what's your message?
Yeah, I would, but he's told me he wants to make a deal. I mean, Zelensky wants to make a deal. I don't know if Putin does. He might not. I don't know. He should make a deal. I think he's destroying Russia by not making a deal. I think Russia's going to be in big trouble. You take a look at their economy. You take a look at the inflation in Russia. So I would hope. I got along with him great, and you know, I would hope he wants to make a deal.
Mr. President, are you keeping U.S. sanctions on Russia until he makes a deal?
Well, sanctions or tariffs. I think the word tariff is much better because it keeps your dollar stronger. I think tariffs are more effective. I mean, I use sanctions on Iran. Iran was broke. When I left office, Iran was broke. They had no money for Hamas or Hezbollah, none. They were flat broke. And October 7th would have never happened. And I think you all know that. It would have never happened. They had no money. Now they're rich, but you know, they're weakened in a different way. I would say that the one attack by Israel really set them back. It really set them back. The Pagers, and others. You know, the attack on air defense was a bad attack for Iran.
What are you signing now, sir?
It's an executive order relating to reforms to the federal workforce, including to the senior executive service.
We're getting rid of all of the cancer. I call it cancer. The cancer caused by the Biden administration.
Sir.
How confident are you, Mr. President, that you can keep the ceasefire in Gaza and conclude the 3 phases of this deal?
I'm not confident. That's not our war, it's their war, but
I apologize.
I'm not confident. But I think they're very weakened on the other side.
Do you support the 2-state solution?
Gaza, boy, I looked at a picture of Gaza. Gaza is like a massive demolition site. That place it's really got to be rebuilt in a different way.
Do you plan to help rebuilding Gaza?
I might. You know, Gaza is interesting. It's a phenomenal location. On the sea, best weather. You know, everything's good. It's like some beautiful things could be done with it, but it's very interesting. But some fantastic things could be done with Gaza.
How do you see the future in governance for Gaza?
Well, it depends. I can't imagine you could have, well, you certainly can't have the people that were there. Most of them are dead, by the way, right? Most of them are dead. But they didn't exactly run it well. Run viciously and badly. So you can't have that.
Mr. President, on TikTok, sir, do you pause any decision on Chinese tariffs until you know what the resolution on TikTok will be?
No, if China didn't approve it, we could put tariffs on China. Don't forget, China charges us tariffs, and we charge them very little, except for what I did. I put a lot of, we took in hundreds of billions of dollars. But until I came along, China never paid 10 cents to this country. They ripped us off, and they never paid anything. But like, if we wanted to make a deal with TikTok, and it was a good deal, and China wouldn't approve it, then I think ultimately they'd approve it because we'd put tariffs on China. Maybe. I'm not saying I would, but you certainly could do that. And if we said, well, if you're not going to approve it, then that's a certain hostility, and we'll put tariffs of 25, 30, 40, 50%, even 100%. And if we did that, I think they'd approve it.
President Trump, you've seen the other living presidents a couple times in the last few months. If you ever had to call on one of them for advice about anything that's going on here, which one would you call?
It's an interesting. Well, I thought Bill Clinton was a very good politician. I don't think he was used properly. I think they disrespected him. When Hillary was running, he came back and he said, you know, you better get up to Michigan and Wisconsin. You remember that, Peter? Every house has a Trump sign on it. And they all laughed at him because the Republicans hadn't won Michigan or Wisconsin for decades, long time. And they all laughed at Bill Clinton. Like, the hell does he know? And he turned out to be right because I won both of them. And then we just won both in this election, too. We won Wisconsin and Michigan and every other swing state. We won all the swing states, all 7. They talked about 7 swing states. We won them all. So, but Bill Clinton he had a great political sense, I think.
You looked like you were having a good conversation with President Obama at President
I
Carter's
was.
funeral.
And you'd like to know what it was? Oh. Everybody wants to know. I know, I wouldn't want to, but we were having some crazy conversation. Why do you asking a question like that? I don't think you want to know. You might not.
Tell us what you just signed.
You might be insulted.
It's an executive order relating to holding former government officials accountable for unlawful disclosure of sensitive information. This next one, sir, is a declaration of a national energy emergency.
So you also
That's a big one. You know what that allows you to do? That means you can do whatever you have to do to get out of that problem. And we do have that kind of an emergency.
President Trump, at some point, will you use your powers of the presidency to tell Americans who are concerned about drones?
Yeah.
A few weeks
Good.
ago,
Yeah.
what exactly
I will.
was happening? Can you tell us now?
In fact, I'd like to know because I just got here.
What do you think?
I just came here. I've been here for what, 15 minutes now.
Do people listening, because this is going out live.
And I got to read this letter too. Because of you, I found this letter.
I can read it for you.
It's interesting. Yeah, I know you would. Your father would too.
But is it anything these drones? Is it anything that people need to be worried
No, I think
about?
it's terrible. I would like to find out what it is and tell the people.
And can you commit to some kind of...
In fact, I'd like to do that. Could we find out what that was, Susie? Okay? Yeah, why don't we find out immediately? I mean, I can't imagine it's an enemy or there would have been, people would have gotten blown up all over. Maybe they were testing things. I don't know why they wouldn't have said what it was. They had a lot of them flying over Bedminster, which is interesting, right?
And with the events today and yesterday, was everything moved inside just for cold weather, or was there some kind of a security concern?
No security. Because they had everything shut down to drones. You can shut that down pretty easily if you're sophisticated. They're very sophisticated, these people. No, it was just cold weather. And we made a good move because, first of all, I thought it was incredible in the Capitol today. You know why I liked it? Because I got great reviews on that speech. I got great reviews. Can you believe it? They actually were fair.
This is
Maybe the fake news is changing.
Unleashing energy production.
Yeah, unleashing energy production. But I thought it was, I think having it in the Capitol is great. It's obviously, you can take care of the people you have to take care of. The city was booming. And if we would have done it outside, people would have been hurt because it was really cold. It was looked sunny. But when you stood outside for 10 minutes, people were running back in. It was really cold and really windy. The wind brings it down a lot. So we made the right decision. You couldn't have stayed. I don't think you could have had it out. You know how cold it was today. It was, people went out for a little while just to test it. They couldn't stay out more than 10 minutes. They all came back in. So we would have had a disaster if we did that, and people would have been hurt.
The unlawful disclosure deal, is that related to the Hunter Biden situation?
Which one?
The one on unlawful disclosures by federal officials, is that related to
No, I think it's just more general than that. It's not Hunter Biden. I was surprised that President Biden would go and pardon his whole family because that makes him look very guilty. I could have pardoned my family. I could have pardoned myself, my family. And I said, if I do that, it's going to make me look very guilty. I don't think I'd be sitting here, frankly. If I did that, I don't think I'd be sitting here right now because I would have shown that you're guilty. But by pardoning his brother or brothers, by pardoning all of those people that he pardoned, by pardoning J6, the Unselect Committee, they destroyed all of the documents. They deleted all of the information. There's no information. And a lot of the information pertains to Nancy Pelosi because she was given 100, I mean, you know this, it's on tape with her daughter. Nancy Pelosi was responsible for not taking advantage of 10,000 soldiers or 1,000. You wouldn't have you could have used 400. It was a relatively small crowd. It wasn't the crowd that was at the mall. It was a small crowd. So I was a little bit surprised that he did it, because it makes him look guilty. I mean, he's going to have to live with it. Now, with that being said, it's unbelievable precedent it creates for a president. But the precedent is unbelievable. Now maybe every president that leaves office, they're going to pardon every person they ever met, so they don't have some lunatic like deranged Jack Smith, who's a total lunatic, by the way. Not a smart guy either, he's a dummy. But we beat the hell out of him. And I helped my reputation.
Do you think you'd have to do the same thing at the end of this term?
Well, I guess now I have precedent to do it. I wouldn't want to do that. No, I think it makes you look very guilty. I think it makes Biden look very bad, very weak, and very guilty. And I mean, he pardoned everybody. How about this J6 committee? Why is he pardoning them? The reason is because if you delete and destroy documentation, everything, they have nothing, because they were guilty as hell. They rigged it. It was a rigged deal. And when you do that, they look very bad. But I was a little surprised he did it. Liz Cheney, I mean, she's a lunatic. And she lost by the greatest margin in the history of a politician running for Congress, like 40 points. The reason it was the greatest is because anybody losing that badly is going to drop out. But she's a nut job. She doesn't drop out. You know, she just keeps chugging forward. And she lost by almost 40 points. That's the biggest number anybody's ever lost by. But why would Biden do that? He pardoned her and pardoned everybody. The reason is that they destroyed documents. And if you're even in a civil case, which this wouldn't be, I mean, people go to jail for a long time for doing that. What's this one?
That's unleashing American energy, sir. It relates to easing permitting processes and other regulatory systems to ensure that we can produce energy efficiently to drive the American economy forward.
President Trump, looking around the office, we noticed some changes from the way that Biden had it set up. Can you confirm that you have added back the Diet Coke play?
I think this, first of all, I just got here. So my people came in. They have extraordinary decorator sense, right? Let me just see some of the pictures. That's a good one. I could live with him. I could live with George Washington, I can tell you. I could live with Thomas Jefferson. I could live with most of them. They took a very safe route. They don't have any bad ones up there.
Withdrawing from
What is this one?
Withdrawing from the World Health Organization, sir.
Ooh, that's a big one. So we paid $500 million to World Health when I was here, and I terminated it. China, with 1.4 billion people, we have 350 to pay. We have, nobody knows what we have because so many people came in illegally, but let's say we have 325. They had 1.4 billion. They were paying 39 million, we were paying 500 million. It seemed a little unfair to me. So that wasn't the reason, but I dropped out. They offered me to come back for 39 million. In theory, it should be less than that, but, you know. And when Biden came back, they came back for 500 million. He knew that you could have come back for 39 million. They wanted us back so badly, so we'll see what happens.
Mr. President,
Pretty sad, though. Think of it. China pays 39 million, and we pay 500 million. And China's a bigger country.
Mr. President, you spoke about inflation today in your remarks. What actions are you taking today that will have a direct impact for Americans on their everyday costs to bring the costs down?
The biggest thing and factor for inflation is energy. They screwed up my energy policy, and then they went back to it. You know, they heard it really badly, and then they went back to it, and they started drilling more, but by that time it was too late. Many of these things that we're signing and that Doug Burgum is going to be signing, and Chris Wright, who's phenomenal at, you know, Energy, Department of Energy, we're going to be taking a lot, we're going to make a lot of money from energy. We have a We have more than anybody else. We're going to make a lot of money from energy. We're going to make a lot of money from tariffs. You know, European Union charges us, they have a VAT tax of 20%, but it's really much higher than that. And that's the equivalent, almost the equivalent of a tariff. And they're tough. They're very tough. They don't take our cars. They don't take our farm product. They don't take almost anything. And yet we take their cars and we take their farm product. We take a lot from them. So, you know, we have like a $300 billion deficit with the European Union. So we'll straighten that out with either tariffs or they have to buy our oil. The one thing they can do, our oil and gas, the one thing they can do to catch up quickly, buy our oil and gas.
Will you travel?
And they should do that.
Will you travel to China this year?
Yeah, it could be. I've had the invite.
President Xi invited
I would
you
do it,
to
yeah.
come this
I
year.
would do it.
Talking about the European Union and the tariffs, like, what do you mean when you say that European Union country like Spain is part of BRICS?
That are what?
BRICS.
Oh, BRICS. No, I was talking about BRICS. BRICS are 6 nations. I think it's 7 nations. And they were looking to do a number in the United States. And if they do that, they won't be happy about what's going to happen to them.
Are you still considering a universal tariff, Mr. President, on all countries?
I may, yeah, but we're not ready for that yet. We may put it, wrap it,
Mr. President.
because essentially all countries take advantage of the U.S. We don't make any good deals in the U.S. It's amazing in a way that we exist. We don't make good deals. We don't have any good deals. We have a deficit with almost, not all, there are a couple, I won't tell you their names because I don't want them to find out about it because they'll feel stupid. But there are a couple of countries that actually don't make money with us. But I don't want to let you know because they'll immediately change that. But we're gonna do. I tell you what, our country has an amazing economic future. I really believe that.
What kind of universal tariff if you did do one?
Well, you'd put a universal tariff on anybody doing business in the United States because they're coming in and they're stealing our wealth, they're stealing our jobs, they're stealing our companies, they're hurting our companies. So you put a tariff on to keep them from doing that.
Mr. President, you surrounded yourself with a whole bunch of billionaires today. President Biden, in his farewell address, warned about an oligarchy. I was wondering if you could respond to that.
Well, he had a lot of guys, and then they found out that he didn't know what the hell he was talking about, and I think they deserted him. They deserted him, those same guys. Look, I don't make pretenses, smart guys, but there are a lot of smart people around, but they did desert him. They were all with him, every one of them. Now they're all with me, I don't know. It's not going to get anything from me, I don't need money. But I do want the nation to do well, and they're smart people, and they have, they create a lot of jobs. And if they don't do it, China's going to do it. You know, what they've done is they've taken industries and they've taken it away. They outsmarted China. And, we sort of like that. It's okay. They've done a great job. A lot of them. Not all of them.
Protecting women from radical gender ideologies.
Ooh.
Mr. President, going back to the World Health Organization, you were the president during COVID. Don't you see the importance of an organization like that to coordinate a global response?
Sure, I do, but not when you're being ripped off like we are by the World Health. World Health ripped us off. Everybody rips off the United States, and that's it. It's not going to happen anymore. Thank you very much, everybody.
All right, guys, let's go.
One last one, sir. This is your Martin Luther King Day proclamation.
Thank you, Press. Thank you, sir. Thank you, Press.
Thank you very much.
Thank you, guys.
Thank you.
Let's go. Thanks, Press. Thank you, guys.
This is Martin.
Let's go, guys.
What are we doing on this stuff?
All right, guys, let's go.
Thank you very much. Thanks.
All right, thank you.
Well, that's President Trump there who's being... That's President Trump there who's been signing a number... All
Okay.
right, we got there.
Literally forced us back on air. There we go.
That's been President Trump in the Oval Office signing a number of executive orders, but also answering and really fielding just so many different queries from journalists that are in the room with him. But some of the highlights, of course, he signed an executive order on TikTok. We heard about the war in Ukraine, the Middle East, ongoing there, tariff risk as well. I mean, what stood out to you out of that?
I mean, the TikTok, we were literally watching him sign the executive order on TikTok, which he then eventually went to say that it could be used as a bargaining chip with China. I think on the China story, he did get an invite to visit China, which it is a possibility, he said this year, that he could visit as well. But among many things that we can get into here, universal tariffs for one, I mean, I don't know where to start. And, let's bring in Stephen Engel, who's with us right now, who's also been listening in to that briefing. Steve, what stood out to you? You've been covering the story this morning.
Well, there's a lot to chew on here, obviously. The World Health Organization signing the executive order to withdraw from that organization, and a number of things, obviously, on TikTok. Let's just start there, because he's basically informed the Attorney General's office not to take any action on TikTok or any of these other entities, if you will, that are posing national security threat, but in particular in TikTok for 75 days. And then he also goes on to essentially in this statement saying he will not ask the Department of Justice to take action beyond that either. I think he's trying to find a buyer, a 50-50 joint venture partner. But the problem there is in that law that was signed by Congress, bipartisan law in April, it requires a full divestiture of the Chinese stake. ByteDance is the owner, but the assumption is that the Communist Party of China is also behind that. So it's going to be a little bit more tricky because Mike Johnson, the House Speaker, has already said nothing will be accepted except a full sale of the Chinese stake in TikTok. I think even Donald Trump said there are bigger issues. China has bigger issues than just TikTok, but they would probably want to find a buyer as well. Shou Chu is there. He's the CEO. He was at the inauguration. He met with Elon Musk. We do know that. But Donald Trump sort of poo-pooed that idea of Elon Musk. He has enough to do, sending rocket ships into space and everything else. So perhaps not Elon Musk to be the U.S. buyer, but he says every rich man in the country has called me about buying a stake in TikTok. We don't know if that's just he's just saying that or whether that is true. But there's still a lot of runway left to go on this TikTok. He signed the executive order essentially stretching out the period of enacting potentially that law to shut it down by 90 days.
What we do know, billionaires have, of course, been among the bidders for TikTok's operations so far, though, in the US. So maybe there is some grain of truth to that, Steve. But stay with us. Let's bring in Kinja Lau. He's Chief China Equity Strategist at Goldman Sachs. And from a market's perspective, I mean, we've just seen Chinese equities coming online. They're still up. What did you think about what we just heard there and how it sort of sets the scene for Chinese equities?
Right. As Stephen said, there's a lot to digest, right? But I think one thing that we've learned since 2018 is really that U.S.-China relations are multi-dimensional, right? Talk about trade, technology, capital markets, geopolitics. So it's highly uncertain, and we'll see how the tariff risks are going to unfold. But I think one thing to flag here is that I think at the moment, the equity market is not too concerned about U.S.-China tensions at the moment. And the reason I'm saying this is that we have a proprietary indicator to help us quantify to what extent U.S.-China tensions are embedded in prevailing equity valuations. And right now, I think we're at mid-range, right? So again, suggesting that this is not the most topical or at the forefront of investor concerns. Now, when it comes to tariff, it's still our base case that the U.S. will raise tariff on China by about 20 percentage points by the end of this year. Timing is highly uncertain, but if that's the case, I think China should be able to digest that. So we think there will be some policy response from the Chinese government to soften the external headwinds, as well as trying to facilitate the economic rebalancing from external demand to domestic demand. So from a market standpoint, we're still forecasting about 20% rise in Chinese equities over the next 12 months.
And what is the assumption there on what type of earnings growth you're expecting on the, let me call it 2020, like 20% tariffs, 20% return? What is earnings growth?
So let me say this, David. Without tariff, I think we can expect sort of low teens type of earnings growth from Chinese corporates for this year, 2025. But after factoring in about 20% tariff rise in our forecast, we're now looking for about 7%, which is somewhat below consensus. So if you break down the 20% returns that we are looking at right now, it's about 10% coming from multiple expansion or multiple recovery, but about 10% from earnings.
So, Steve, what have we heard so far on the outlook for tariffs? Because Goldman Sachs is saying their base case is around 20%. We know that there's going to be a study that's going to take place now, but what's the process going to look like? And beyond Mexico and Canada, do we get any sort of sense on the timing as well?
Well, I think the leadership in Beijing before this press conference probably woke up feeling fairly relieved that they did not get a visceral attack on China across the board. Look, if there were these 60% tariffs announced through executive order this morning by Donald Trump, that would kick a number of retaliatory steps and also policy response steps immediately from China. This buys them time. It also buys the Trump administration time to formulate the right way to go forward with tariffs. Clearly, tariffs have not been put on the back burner. They're still on the front burner. We just got those headlines essentially saying that tariffs on Canada and Mexico could come into action February 1st. It could be just a matter of minutes until we get a headline that says China tariffs will go into effect on this date, but right now there's a bit of a pause. Maybe this is because of the conversation, the phone call recently that Donald Trump had with Xi Jinping. They did talk about TikTok. They agreed to work together on resolving TikTok. There were lots of comments from Donald Trump about TikTok, obviously, about trying to find an equitable solution, maybe a 50-50 joint venture. But on tariffs, I think we just have to kind of wait and see. But I'm sure Beijing is fairly pleased right now that they were not in the crosshairs this morning. Others perhaps were, Canada and Mexico. He talked a little bit about Europe as well. He talked about the notion of universal tariffs as well. So I think we have to kind of wait and see what the response is from Trump.
And just one thing to flag. Last week we held our annual Global Macro Conference in Hong Kong, very well attended. 1,800 people came from different parts of the world, and we did a lot of investors surveys and polling questions. And obviously, we asked investors their view about tariff, right? How much they're going to expect from the U.S. And quite interestingly, more than 50% of the respondents, they picked 20%, 10 to 20% as their base case for potential increase on China tariff. So when we first put out our 20% sort of forecast last November, our number was perceived as very optimistic. But now it seems like market view or expectation is converging to our number.
Yeah, it's coalesced towards a lower level. Steve, yeah, go ahead.
Yeah, I think some have likened these executive orders and the fact that he did not necessarily single out China is Trump. Instead of using day one is kind of a broader initiative. Day one could be the first quarter of his administration. It could be the first week. It could be the first month. But essentially, it switches Trump into what he is, and that is a negotiator. So I think the threat is there. China is responding. Look, Xi Jinping sent his vice president, Han Zheng, to the inauguration. He met with Elon Musk. He met with U.S.-China Business Council members. Also, Shou Chu, the TikTok CEO, was there at the administration. They're all trying to establish some sort of goodwill going forward. So I think a slew of 60% tariffs on day one would have dampened that mood.
Well, I mean, Kinjer, to your point, and to, I think, the moving parts that we still have to sort of juggle with, if you're a China bull, I mean, you're hoping 20%. I mean, you're hoping no tariffs, right? But in the event we get something higher, and who knows if we get something higher, for example, one of your report highlights the fact that there is a domestic policy put that in almost all scenarios, correct me if I'm wrong, the market has found a floor, and that a bear market in China never exceeds 3 years. And was last year the third year?
Last year, what? Yes.
It was the third year there. So is the floor in, I guess, is my question there.
Right. So this is the story that we're painting. So essentially 2024 is a year where the policy put has been exercised, right? That's why putting a floor on the market. Now, in 2025, we think that we're going to transition from a policy expectation phase to more like a policy implementation stage, right? So we need actual policy implementation to support growth and then to drive earnings. That's why we think the upcoming 2 sessions in March will be important, and that's the venue for us to likely get more clarity about policy support from the government.
And Steve, of course, you're actually going to be travelling to Beijing for us for the upcoming meetings in March. How much is what we just heard here and these first few days in office for Trump, how much is that going to also factor into the sorts of policies we get out of that as well?
Well, I think the Chinese economy has its own set of issues that they have to deal with, whether it is persistent deflation, lack of confidence from the consumer, all kinds of structural issues, the property market, the prospect of tariffs obviously is there. It's going to hurt potentially exporters, which has been the strength of the Chinese economy going into 2025. There is going to be a policy response coming out of the National People's Congress for sure. We know that because after the Central Economic Work Conference in late December, essentially they've set the agenda. We won't hear the specifics, but clearly there will be a fiscal response. How much? We don't know. And what kind of steps to kind of put a floor on the property market? That's a longer structural problem, but also just consumption is going to be the theme going forward in 2025. And they can do something policy-wise.
Is that the equity play? Consumption, or are you looking at other sectors?
We like consumption as a theme. That's why we stay overweight consumer tech, internet companies, media, but it's a very broad concept, but really for investors to pick up some alpha, we think the theme of local government consumption could be interesting. Now, the logic here is that we think that that swap program is going to help improve local government's circulation, finance position. And remember that if you look at consumption as a whole, is 55% of GDP, but 1/3 of that comes from local government spending. So if the local governments, they have more money to spend, I think that will translate into better local growth backdrop. And we like sectors or stocks that are more sensitive or related to local government spending, like healthcare, F&Bs, and constructors and things like that.
How are you thinking about the yuan as well in this? I mean, we've just seen a huge sort of whipsaw off the back of it, and we had that expectation for dollar strength. We saw a little bit of weakness overnight, but what's the sort of flow-on effect then?
We're looking for some currency weakness for the RMB. So let's say if 20% comes true, then we expect the RMB dollar CNY to go to 7.5. So you're talking about another 3%, 4% potential depreciation from here.
Well, I just came back from the UBS Greater China Conference in Shanghai, and I talked to Al Gabor, who's the chairman of the American Chamber of Commerce in Shanghai. He said one of the big issues for American companies and for the Chinese economy is going to be an outsized depreciation of the yuan. What does that mean for outflows, and how does China do a policy response to balance giving competitiveness to its exporters, but at the same time not seeing those outflows?
Now, Stephen, if you look at the statement coming out from the PBOC, they're still very much emphasizing the currency stability, right? So, I mean, we're talking about a bigger problem, well, a bigger backdrop here is that the US dollar strength is quite universal, right? US dollar is appreciating against the major trading partners. So I think the currency weakness here we're forecasting should be manageable from a capital flows perspective. And I think at the same time, don't forget that the capital account is still highly managed by the Chinese authorities. So we don't think that the capital outflow problems will be that significant.
What about just to lead into the geopolitical angle a little bit more, what about some of the trades that have done extremely well in China because of geopolitics? You know, I'll just mention a specific name. You know, SMIC has effectively doubled since September. You know, these companies and sectors that might benefit if China is successful in being, you know, industrial independent, for example.
Yeah.
Do you think that trade continues, that strategy continues, or is it worth taking the profits there and putting them elsewhere?
I think you're right, David. So the self-sufficiency trend or theme has done well. But I think if you look back over the past couple of years, one of the very rewarding and alpha-generating ideas or themes in the equity market has been the shareholder returns theme.
Okay.
Right? Chinese corporates paying shareholders back via dividends and buybacks. Now, just a few numbers to put things into perspective. Last year, Chinese corporates returned more than 3 trillion RMB worth of cash back to shareholders. Again, via dividends and buybacks. And given the policy encouragement here and the relatively robust financial positions for Chinese corporates, we expect that number to go up to 3.5 trillion this year. That's record high. So I think whether we talk about uncertainty from an external perspective or domestic growth headwinds, I think that theme, shareholder returns theme, will prevail.
I mean, just to pick up on that as well, I mean, some would say that's a bad thing if, if companies can't find better use for their cash and give it back to shareholders. The whole, do I invest for the future or do I give it back? When does that story become sort of a negative as far as, what it means for the outlook and confidence in the economy is concerned?
Right. I think we're talking about a couple of things here. Number one, we talk about excess cash, right? So right now, as Stephen mentioned, there's some problems domestically in terms of overcapacity, oversupply. So for companies in those areas, I think it's much better for them to return cash back to shareholders as opposed to investing in new capex. But obviously, in areas where growth potential is much more significant, it would be better for them to invest in the future as opposed to just paying cash back to shareholders.
Kinger, thank you so much for, first being patient, staying with us, of course, unexpected news coming out of D.C. today. Kinger Lau, of course, out of Goldman Sachs, Chief China Equity Strategist, out with their reports and the outlook going into this year. And, of course, Stephen Engel, our Chief North Asia Correspondent.
I thought you were about to forget Steve there.
The presence of Steve is felt throughout the room.
It was a great roundtable, so thanks to both of you for joining us.
Thank you, Stephen Engel.
You're welcome.
Yeah. We're looking at currency markets here.
Well, it's been, of course, the big moves that we've seen in the dollar, because yesterday we had that dollar weakness, and then overnight, not even overnight, sorry, I should say, really, since this line came out about when Trump's planning to enact these 25% tariffs on Mexico and Canada by February 1, I mean, that's only just a couple of days away from now. And so, again, you've seen that very sharp reversal coming through once again. You've got Mexican peso losing ground. We saw the Canadian dollar, of course, under pressure. Offshore yuan there to notice. Well, we can also see the onshore. But this is really just that story of tariff risk and exactly what sort of bar. Goldman Sachs was just saying they're at 20%. Maybe, that's a lot of people's base case. But, of course, Trump is really proving himself to be someone who's extremely unpredictable. And we've seen just so many different changes coming through. Action to withdraw from the WHO.
Yes.
Elimination of EV mandate. We've got action on TikTok, for instance, that yesterday we were even questioning, would that be legal? There's just a ton of different things right now.
I mean, this last, I'm counting the minutes right now on the clock, the last 47 minutes since we've been on air is really a reminder almost that we are back in the Trump era, right? A lot of the assumptions that we were making, a lot of the rundowns, news rundowns, of course, across the world have been thrown out the window because of everything unexpected that's come through as well. So really what your key assumptions are, to Bill's point, is really what's going to be key, and how much, degree of confidence we can attach to those assumptions given, quite frankly and literally, the last hour we've had so far here. And markets have changed directions at least 3 or 4 times in the last 30 minutes or so. So we'll continue to be on top of the story.
Yeah, that's right. And if you want to get more on this as well, you can turn to TLive Go. We've got a team of expert reporters, editors, analysts, all talking about Donald Trump's inauguration and all the headlines that have just crossed as well. So go to TLive Go for that. Plenty more ahead. This is Bloomberg. Bloomberg's learned that Chinese officials are taking steps to stabilize operations at distressed builder China Vanke. That's after deepening liquidity problems last week triggered turmoil for its bonds and its shares. For more, let's bring in our China correspondent Min Min Lo in Hong Kong. And Min Min, we're seeing the stock there up at 5.5%. Seems like investors are liking what we've heard so far.
Yeah, I mean, we have seen bond prices really whipsawing because last week there was a bond sell-off and then bond trading had been halted because the prices were falling by more than 20%. And yesterday, bond trading had been halted because the bond prices were surging more than 20% after news of this potential government intervention broke. So what we know so far is that, according to sources, Shenzhen officials had met at a closed-door meeting on Friday to discuss Vanke, and they are intending to bring in auditors, financial advisors to look into Vanke's balance sheets and its property projects going forward. Now, there are a lot of questions about what this means. Is there going to be a cash injection, for example? But Bloomberg intelligence analyst Christy Hang thinks that that is not very likely because we know the government has been not very keen to orchestrate any sort of bailout of property developers. The government has signaled that they are prioritizing home owners' rights. And so far, if the government comes in to sort of guarantee home completion, that would at least prevent the pullout of buyers and lenders. And it looks like the government is taking it one step at a time now. They're assessing what sort of assets Vanke has, what kind of liquidity gap it has, and what sort of debt rescheduling that it requires.
Well, what do we know about the problem? Like, how big is the scale of the financial issue at this point? Like, what do we know about this?
So it's pretty financially distressed now because some of its bonds are trading at 30 cents on the dollar.
Right.
It has $4.9 billion worth of debt maturing this year. That is the highest amount for any Chinese developers this year. And so it's a pretty large amount. And so far, this company has been seen as pretty insulated from default because it has very strong government backing. Its largest shareholder is Shenzhen Metro. And so I think the government is keen to avoid a sort of default that could bolster, that could really pummel confidence if the impression is that this property crisis is now beginning to hit these companies that have very strong state backing. So Christy Hang, for example, is saying that the company's cash coverage is extremely short. It's only enough to cover about 65% of its short-term debt. That's the weakest since 2004. And she's saying that their liquidity could be at breaking point this year if the government doesn't step in.
Country Garden as well in the China developer space. We've just had shares coming back on this morning after a 9-month trading hold. And it's again, we've seen very big moves there.
Yeah. So, I mean, Country Garden, they halted trading since, I believe, April of last year after it failed to publish its 2023 financial report. Now it's resuming trading because the company said it's already fulfilled the market guidelines for resumption of trade. So it's published its 2023 financial report and the 2024 interim financial report. And the company's financial standing is really not good because in 2023, it defaulted on $11 billion worth of loans. It had made losses of about $24 billion. The company is saying last year it narrowed those losses, quote, substantially, but it doesn't know when it's going to turn a profit. And yesterday they had a hearing. Yesterday they sought more time and they were granted. The court hearing was delayed to late May. The company says it's expected to come to a sort of deal with creditors by end of February. They have reached a deal with a group of bank creditors, but they're still securing support from a group of bondholders, and they're negotiating over the specifics like the conversion rates for the mandatory convertible bonds and so on.
Min, thank you so much. Min Lo, our China correspondent there on the latest within the property sector story. So back to the other top story we're tracking and more headlines coming through here out of the White House. Donald Trump has lifted the former President Joe Biden's freeze on LNG exports. On your screens right now, we're down about 4% on nat gas futures here, Belle.
Yeah, and it sort of plays into a broader energy theme that we're seeing as well, because he's declared an energy emergency. It is unlocking new powers in this space. But definitely, he was saying, if Europe wants to sort of fix that trade deficit or trade surplus that they have, then they should definitely be looking to importing energy from the US as well. So that was something he was saying, because he's essentially likening the VAT that they have across Europe to tariffs that he's looking to enact as well. But we'll have plenty more ahead. You're watching The China Show. Welcome back to the China Show. Taking a look at how the Hang Seng is faring half an hour into the session this morning, and actually we're seeing it still holding on to gains. Yes, you're off the highs of the day, but still in positive territory, and we can't really say that across all Asian equities today. It is sort of, we've had, of course, Donald Trump, his inauguration, a flurry of executive order signings as well, that press conference with just untold questions from reporters, really. But I think one of the key headlines out of it is that tariffs are coming on Mexico and Canada, according to President Trump, from as soon as February 1. And the key country that isn't on that list is China at this point in time. Yeah,
China has so far been absent, not completely, because he then went, during the press conference, largely unplanned questions, he then went on about China and TikTok as a bargaining chip. But yes, I think really one of the takeaways, as Bella was pointing out, is really this focus first on allies and key trading partners in the neighborhood in North America. In fact, we are getting more lines coming through as well. And you know what? We are back in Trump era. We've had to rewrite our headlines a couple of times in the last hour or so. Markets have changed directions 3 or 4 times at the very least. The dollar, which is coming off its worst single day since, I think, 2023, if I'm not mistaken, or in fact even further than that, is reversing course, and some of the weakness that has come, or some of the strength has come through in the Treasury market is now reversing into the opposite, as you can see on your screens. In fact, just on the dollar 210, the dollar index, and the Bloomberg dollar index on your screens, just to give you a sense of where we are right now. And again, this is really very headline risk, is the way I would describe it as well. We can talk about this chart later on, by the way. But I guess the big picture here is, in many ways, did Donald Trump somewhat open up the path for lower rates and an equity market to break out even further? Anyway, we can get to that later on. Lots to unpack here, Bella.
Yeah, and also just to keep abreast of what's exactly happening with this long weekend celebration but inauguration events, essentially. And we can actually show some live pictures here of the Liberty Ball that's as well underway. We just had earlier seen Kid Rock performing. He's a long time... There he is on stage. So at the Liberty Ball, Kid Rock, he's a long time supporter of Donald Trump. He's one of the, headline acts over the weekend. Oh, we're just hearing... Okay, well, we're seeing some...
Oh, we hear it's not Kid Rock.
Sorry about that. All right. Well, we've got someone on stage there as part of this.
Billy Ray Cyrus is one of... Okay.
Billy Ray Cyrus.
I mean, it's a bit of a wide shot, too. It could be anyone, really, if you think about it. But yes, I mean, to Belle's point, we are live, of course, there. And where it's just about, I would imagine the party's just getting started at 9 p.m. As far as that's concerned. So, yes, we will just peel away a little bit while I think maybe it looks to be that they're going to be speaking a little bit soon. Let's get through some of the things that the new U.S. president has had to say in the last few hours or so.
China charges us tariffs, and we charge them very little, except for what I did. I put we took in hundreds of billions of dollars. But until I came along, China never paid 10 cents to this country. They ripped us off, and they never paid anything.
Let's bring in our news desk editor, Jill Desis, with us in studio this morning. And Jill, I mean, we've just covered some of the sort of headlines, but there's been really a lot to digest. So what is standing out to you so far?
Yeah, Belle, really a head-spinning number of announcements, but tariffs, I think, is the big standout here. I mean, if you run through kind of the just actionable things that Trump is talking about, it really does come down to some of these duties that he's threatened to impose on Canada and Mexico in particular. So if you recall, during the first Trump administration, I mean, at his insistence, the U.S. negotiated a new agreement with Canada and Mexico, replacing NAFTA. Now, though, he's coming back into office and he's threatening 25% tariffs on goods coming in from Mexico and Canada. He's citing, in particular, concerns about the fentanyl crisis at the border, undocumented immigration at the border. And so this idea of him enacting 25% tariffs on Canada and Mexico by February 1st is what he's saying during this flurry of announcements announcements today that's standing obviously quite a bit in contrast with something that you mentioned just a couple of minutes ago, Belle, about how we haven't really seen a ton of action on Canada. I know we just played that clip where he's obviously, on China, really. I know that we just played that clip where he's railing against China, and it does seem like there's something coming there. But it is really interesting to kind of watch this dichotomy between these really sort of aggressive gung-ho actions that Trump is taking on some areas while also kind of exercising cautions on other. I think that, means maybe there's more to come on China a little bit later, but it is kind of interesting to see that all play out in this flurry today.
What is the sense you get why China has largely been absent? And, again, very small sample size. It's been just an hour or so. Is it domestic politics? Is it foreign policy strategy? What do you think is behind this?
Well, yeah, it's interesting, David, because, on the one hand, I think, these number of announcements that we're seeing, I mean, some of this certainly is very focused on domestic policy, right? Sort of rolling back some of these, diversity and inclusion initiative stuff that he's putting forth here. But some of it is foreign policy related, such as some of these announcements about, Canada and Mexico. We also did get a hint on TikTok there. He's sort of pushing off the deadline, for that. Doesn't want his Attorney General to deal with that for a while. One thing that I think you have to keep in mind when it comes to China policy, though, is that he still, I think, is waiting for some of these confirmations to kind of come through and some of his cabinet members to really get in place. So you look at people like U.S. Treasury, his pick for Treasury Secretary Scott Bessent, really his pick for Secretary of State Marco Rubio, people that do have are China hawks, or at least have pretty strong opinions there. It could be that he's coming back in and kind of waiting to sort of digest exactly what the strategy is on China. It's really hard to tell, just again with this flurry of things. But again, I think it's just a really sort of interesting dichotomy between these two sides of Trump.
And also, there's TikTok was spoken a lot about in that press conference as well, in the sort of EO ceremony. But does that sort of end up becoming a bargaining chip? But we can actually listen to what Trump said as well first.
Essentially, with TikTok, I have the right to either sell it or close it. And we'll make that determination. And we may have to get an approval from China, too. I'm not sure. But I'm sure they'll approve it. And if they don't approve it, it would be somewhat of a hostile act, I think. But it's good for China if it gets approved.
To me, it seemed like it was really being very much directly linked to becoming some sort of tool that could be sort of weaponized in those negotiations around trade.
Yeah, Val, this to me is really classic Trump, right? I mean, the guy's in office, he wants to cut a deal, right? That's kind of his priority first and foremost. I mean, you remember back during his first administration, there was all this talk about banning TikTok. Here, it's not so much about the national security implications of what having TikTok, owned by obviously the Chinese owner ByteDance operating in the United States is. It's much more about Trump saying, what can we get out of this? We kind of saw a bit of an inkling of this during his first term when, that kind of conversation came up. But I think when you're hearing this, he's talking about we want to get half of TikTok and some kind of a deal. It does indicate that, Trump is here to make some kind of a negotiation to kind of smooth things through. And that's really going to be his first and foremost priority when it comes to working with this app. It sounds like, he's asking for an additional 75 days from his Attorney General to kind of deal with this. So I think that's going to be a really, really big talker for, at the very least, the first few months of Trump's term.
Jill, thank you so much. Jill Deese is there, our news desk editor. And really, that's a good point to bring up. I mean, we're an hour into, if you think about it, the Trump presidency, and the principle or the idea or the notion that TikTok was a non-negotiable because it was at the very center of the story a national security concern has suddenly become, it's a negotiating item, and anything is on the table for TikTok. So what then happens to the notion it was a non-negotiable in national security? But again, geopolitics, isn't it? Let's bring in Mary Nicola to just get us a sense of what the market takeaways are so far right now. If, Mary, for any clarity that we have right now, and the market headlines have been shifting every few minutes or so. Mary, where is your head at the moment?
Clarity is an interesting way to put it today, because I think that we came in to this day, we all woke up in Asia thinking that there was a more measured approach to tariffs. suddenly we get headlines about 25% on Mexico and Canada. So obviously that's going to bring up concerns about what's headed for China. If you're putting 25% on two of the key neighbors and allies for the U.S., what could be the potential for the U.S.'s economic rival. So I think the market, one thing is guaranteed, is that we're going to see volatility. Headline risk is going to continue to dominate, but I think it's too early to get complacent about the fact that Trump is going to take a more measured approach. Yes, absolutely. We saw that a lot of the executive orders that were signed today were more focused on domestic issues, but a lot of that is very similar to what we saw in the first Trump administration, where he did focus on domestic issues first and foremost. And of course, he made that very clear that border was going to be one of his key priorities. So, but it's too early to become complacent about what he could potentially do in terms of tariffs and what are the broad. And of course, that's going to just keep markets jittery and traders a little bit more defensive than probably they came in this morning, looking at headlines talking of a more measured approach from President Trump.
It's interesting because I'm taking a look at trading volumes, and actually they're pretty elevated, which I wasn't kind of expecting to see, given there is just that sort of uncertainty. What do we actually expect in terms of those sorts of dynamics over the coming few weeks, few months even?
Well, the thing about volatility is it does create opportunity, right? So I think you could probably gauge that from in the coming weeks and months, you know, a lot of these fast money, fast traders are going to enjoy this aspect of the fact that there is a lot more volatility, especially currency markets. Volatility is likely to remain elevated, and of course that's going to just create opportunity there. So I think it's even though there's going to be some stance of being defensive, especially with a heaping list of unknowns, you still can capture that opportunity that exists and that can be created from these headline risks. But unfortunately for now, that's what we're trading on. We're trading on headline risk. We're going to see increased volatility, and those are probably the two things that we can guarantee, because any sort of directional trade at this point might be a little bit more difficult.
Right. Mary, I'm going to read out two market calls I've seen so far. I'm sure there are more. I want to get a sense of how, on the macro front, and to your point, things are changing, so we don't really know. Robico's out with a note that, you know, we've talked about this, that China has largely been, I wouldn't say completely non-existent, but not to the extent we thought China would feature in the first hour of the presidency. But Robico now thinks that Yuan could face pressure because China is the next target for tariffs. The other note that came through was out of Tokyo, SMBC Nikko, talking about how Trump has opened up a path for lower treasury yields and Fed cuts out of China. Do we have enough information at this point to trade on those two things, I guess is my question, Mary.
I think the first one is probably more palpable, and I would agree with the first one in terms of I think there's more pressure on the CNY, and that is irrespective of what's happening externally, because you do see domestic challenges, and the domestic challenges is going to continue to keep the yuan under pressure. So if you look at the deflationary risks, if you look at the fact that consumption remains exceptionally weak, this environment domestically is very crucial to have a weak currency. So add on to the external headwinds. I think that's almost in terms of if we're trying to find clear conviction and a clear pathway in this environment, I think the CNY is one of those in terms of the pressure is likely to extend, and that has a lot to do with where the fundamentals lie within growth in China. And then for the latter, I think treasuries is a little bit of a toss-up in terms of my bias would be that we could see higher yields in this environment, especially with concerns about tariffs, with concerns about inflation, with concerns about the deficit. Those things we can't ignore. And so I think the bias for U.S. Treasuries is skewed actually higher, more so than anything else, because of course we still know that the Trump administration, the Republican Party, is really keen on cutting taxes, and of course we still don't know how they will manage this ballooning fiscal deficit. So I think think the markets they'll come under scrutiny, especially when you're still concerned about fiscal profligacy.
All right, that's our MLive strategist, Mary Nicola there. Thanks very much for joining us this morning. And still ahead on the China show, what has absolutely been the dominant news theme of today, and that's President Trump's latest comments on tariffs as we get analysis with Tufts University.
But ahead of that, the president's already, ordered the U.S. out of the Paris Agreement again and also begun reversing Biden-era mandates on EVs. We look at the fallout for energy markets and also EV makers just ahead. This is the China show. Welcome back. You're watching the China show. Only one story in town. It's President Trump. A couple of things here. And we're looking at the energy space specifically. The president has signed an executive order declaring a national emergency aimed at boosting U.S. energy production. Now, the executive action targets regulations on oil and also gas production, EVs, wind power, and also undo many Biden-era climate policies.
The inflation crisis was caused by massive overspending and escalating energy prices, and that is why today I will also declare a national energy emergency. We will drill, baby, drill.
And just to borrow a phrase there from the president, we're going to drill into the story with our team on set. Our senior energy reporter, Stephen Stapczynski, is in Singapore for us, and here on set in Hong Kong, Daniel Lee, our transfer reporter. Stephen, I'll start with you. Of the many things the president said, what stood out to you? What do you think is the top story right now as far as energy goes?
You know, actually, it wasn't even the executive orders that he signed. He had some comments while he was signing them, kind of jib-jabbing with the press. He said that one way for the EU to avoid tariffs is to buy more oil and gas from the United States. That's his big thing. He wants to make money from oil and gas. And yes, he announced an energy emergency. He's going to be removing different regulations that would halt producing oil on certain types of federal land and offshore. He's really boosting that. But I think the big thing to take out of this is he wants to use energy as a trade weapon. And he's putting his targets not just on countries like China, but also the EU. He wants them to buy more. Now, how will they do that? Shipments of oil and gas are dictated by the market. They go to the highest bidder. But potentially, he could urge the EU to buy more through long-term contracts. That's from projects that haven't even started yet. He could get them to buy well for decades from projects that start later, in 2027 onward, or even in the early 2030s. These deals last for decades, and they're worth billions of dollars. And I think that's one thing that he's going to be pushing for while he begins his next time as president.
Yeah, and I guess perhaps lifting that freeze from Biden on LNG exports plays into that over a longer-term time frame. But Steve, the capacity of the U.S. to also really ramp up its drilling, is that realistic?
So they can. There's plenty of oil and gas. There's a lot of shale oil and gas available. Now, the question is, do these private companies want to? One of the big things over the last few years in the oil industry in the United States has been capital discipline. They don't want to unleash the floodgates, because if they do that, the price of oil falls too much and their wells aren't as profitable. It's finding that kind of safe balance in between. And with Brent and WTI around the high $70, low $80 a barrel range, that's a really good sweet spot for shale drillers. Yes, they still turn a profit if prices are lower, but it's not just about turning a profit, it's also about creating value for shareholders and providing some really nice dividends. So if they were to unleash, as Trump is saying, that threatens strategies from the private producers. So I think there will be some difficult discussions between those folks in Houston and what Trump wants to do from the White House.
All right, Danny, we'll bring you in as well more on that EV angle, because we've seen as well some action on that front as well.
Yeah, very much so. The signal is that we've heard for many, many months that these EV mandates that Trump has railed against will be dismantled pretty quickly. And you can see who the winners are clearly going to be here, the likes of Ford and GM, who have struggled in this EV transition for quite some time. And they're losing ground in the likes of China, where that EV transition has very much taken hold for electric vehicles. But it's in the US where there is a huge component around jobs and that kind of support that kind of goes directly into politics and to votes. Trump wants to revive this kind of US manufacturing, and particularly around automotives. And so therefore, by trying to slow down and halt EVs in its tracks, particularly around emissions where there are the critics who would say that by tightening the rules around emissions and on tailpipe emissions, it would force automakers in the US to try and do more on hybrids, more on electric vehicles. So therefore, this is Trump sticking to his word, what he would do on day one, and the winners there very much clear. But also the losers, because ultimately someone like Elon Musk, who is very much in the forefront of Trump's kind of ear, he with his electric vehicles potentially could be a loser. But we've not heard yet on something else that could be done is on these subsidies, these tax credits that consumers can get up to $7,500 US dollars to buy a vehicle. Very much Tesla has benefited from that, although someone like Elon Musk has said in the past that he's very much happy to see these subsidies being rolled back. It's not for the government to be contributing to. So what remains to be seen what else happens in the days and weeks to come.
That was our Bloomberg senior energy reporter, Stephen Stapchinsky there, and our Bloomberg transport reporter as well, Danny Lee. We'll have plenty more ahead. This is Bloomberg.
Okay, lots to tell you about, lots of news in the Chinese property space. We'll start things off with one of the biggest ones, and really one that's been in the spotlight as the market tries to figure out how much trouble or not China Vanke is actually in. Some of our sourcing suggests that Chinese officials are looking to ring-fence and stabilize the situation. As you can see, the stock is up. Some of its local currency bonds are also limited up and, in fact, being halted because they've moved so much to the upside. Country Garden is a stock that you probably don't normally see. It's resumed trade today after being suspended since April of last year. It's now, at least in many ways, delivered some of the obligations to the exchange, and hence stock is up 28%. And New World Development, and this is the one that I think you should be watching very closely next. So, number one is the company has put out a statement saying that it is not in holistic debt restructuring talks, and some of these market rumors and speculation in relation to the group, including its bonds. It's aware of that, but it's not in those specific talks. It's now offered, though, this is our sourcing, the new line that's come through, that it's now offered $15 billion for loan collateral as, again, the market tries to figure out how much this debt burden means and what it means for funding stress here as far as the company goes here, Bill.
Yeah, and I guess the concern is that proposed refinancing can leave fewer assets available for unsecured bondholders as well. So those who have been selling New World notes, and of course we've seen them really at distress levels. But that's sort of the China property story. What else are really moving today, or what is moving today, is certainly currencies, because we've just had absolute whipsaw in the US dollar. Big moves against the Mexican peso, Canadian dollar in particular, two major trading partners of the US. Chinese yuan doing a bit better, really, because for now it seems maybe it's been spared a little bit.
You can really see that visually, too. Two of the currencies we didn't expect to move much more than the Chinese yuan visually, as you can see on your screens, are those on the either side of the U.S. border. In fact, we'll talk more about what Trump means for its allies coming up next for the conversation on the new U.S. president. This is The China Show.
It's 11:29 a.m. in Tokyo. Japanese traders just about to go into their lunch break. We've seen the Nikkei 225 under pressure throughout the session. It did actually open higher, reverse those gains after we had some headlines dropping from President Trump saying that he's going to be looking at tariffs on Mexico and Canada from February 1. That led to some strength again in the dollar. It made a lot of Asian equity traders nervous, and we saw them pulling back. We're going to lunch break fairly steady today, and actually Tokyo is one place where trading volumes are a little bit lower.
I mean, it's a very fluid story. I almost forgot about the BOJ meeting later this week.
Yeah.
Probably not significant today, given all the news flow out there. But I think to Belle's point, right, how do we now need to think about the Fed? Does it change the way we think about the Fed going into some of the conversations today? The story across the dollar is one where it was massively down going into this morning, and I think you can call it splitting the difference across most of the EM/FX space. And really, when you look across the FX space, it was really in the likes of the Mexican peso, as Belle was pointing out, and the Canadian dollar, which seem to be at the very forefront of the FX conversation so far today. But again, it's the night is young, isn't it? Right. As to how President Trump is going to achieve what he described as a golden age for America, joining us now to discuss that is Daniel Drezner, Distinguished Professor of International Politics at Tufts University. Professor, thank you so much for joining us on the show, and quite a eventful day. Lots to unpack is I think, an understatement today. We were thinking originally we'd be talking a lot about China, but now it's Canada and Mexico. Do you think that gives us a good sense of where you think the conversation will be front-loaded these next few weeks at least?
Well, given that Trump gave a deadline, I believe, of February 1st for the tariffs on Canada and Mexico, that obviously is going to be front of mind. But in comments today, he also talked about the idea of imposing, tariffs across the board, as well as more tariffs on China. With Trump, you always have to wait and see if there's actually anything implemented, as opposed to what he is threatening to do. Because with Trump, he's obviously trying to hope that he can successfully coerce other countries into making concessions, and thereby doesn't actually have to impose any of the tariffs, which I'm sure his advisors might actually tell him are going to be expensive to the United States and are going to be problematic in terms of trying to keep prices down in the United States, which is one of the things that presumably got him elected last November.
So that strategy of coercion, talk to us about how the madman theory plays into that.
Sure. The logic Trump always has, and his one sort of truly unique gift in politics, is that he is willing to ignore and indeed transgress foreign policy norms that previous presidents might have adhered to. So the idea of sanctioning allies, which is relatively rare for the United States, Trump is eager to do because he believes that the United States has an asymmetric advantage over more dependent countries like Canada and Mexico. And I believe Trump also thinks that if he can successfully coerce the likes of Canada and Mexico, that will send a message to the Chinas of the world that he will be an extremely resolute bargainer. Now, Trump might actually succeed in getting a few concessions from Canada and Mexico. It's always worth remembering that during his first term, Trump tried to do this with South Korea, for example, and with Mexico and Canada in terms of renegotiating trade deals. He got a few token concessions, but frankly, not much. Trump's category error, though, is always his belief that if he can successfully coerce allies, that'll translate into successful bargaining pressure against the likes of China. There's no evidence that's true in terms of international relations, and there was no evidence that that was true during Trump's first term. And unfortunately, it seems we're going to see a replay of that bargaining dynamic in his second term.
Your outlook, just to pivot to China, what are your expectations between relations there?
This sort of depends upon who is running U.S. foreign policy. Is it Donald Trump's advisors or is it Donald Trump? The one thing that most of Trump's advisors, with the exception of Elon Musk, have in common is that they are all extremely hawkish towards China. They believe that China is the most paramount threat to the United States. It's the only country that's a potential peer competitor for the United States. And by all of that logic, you would expect to see a heightened pressure put on China. That said, again, it's worth remembering that during Trump's first term, he was willing to sacrifice just about every other pillar of American foreign policy, whether it was protesting human rights abuses in Xinjiang, or the crackdown in Hong Kong, or China's throwing its weight around in the South China Sea, or in the East China Sea, so long as he could negotiate some sort of economic deal with China. And this is in the end what led to the phase one trade deal in 2020, which proved to be decidedly underwhelming. If Trump believes that he can cut any kind of grand bargain with Xi Jinping, that is the route he will take. If, on the other hand, China doesn't act this way, then he's going to have no choice but to listen to his advisors, and you're likely to see a ratcheting up of tensions. I think the thing that I would predict would be you'll see an initial, display or an attempt to demonstrate tough bargaining. And then the question is that if China offers any kind of concession, will Trump take the first offer that he gets, or will he hold out? If I had to bet, frankly, I think he'll take the first offer he gets.
Right, and we don't have the benefit of hindsight because the pandemic happened, and what would have been the result of the first trade war, and if China did push through with the buying, we would never know. What I guess my follow-up here is we've heard recently, since Donald Trump got elected again, he's not as tied down to ideology as former other presidents are concerned. So I guess my question there is, do you think he is as concerned about China's economic rise as a threat to the U.S. as most of the people around him?
I think he is concerned about China's economic rise in the sense that Donald Trump, he has an ideology. It's just an ideology that is not one that previous presidents have had. His ideology is actually, in terms of economics, very zero-sum in terms of thinking, which is if the United States is running a trade deficit with a country, that means the United States is losing and that other country is winning. And just as he was, fearful of Japan's rise in the 1980s, he has been concerned about China's rise for the last decade or so. But that said, this goes against Trump's other impulses, which is that he is very much attracted to authoritarians. He, admires authoritarians who can actually exercise power in a relatively unconstrained manner. And so I think he also believes that he can sit down with Xi Jinping and negotiate some kind of deal. The question is whether the deal provides anything of actual value to the United States or not. And this is where I think in the end, you always have to remember that as much as Trump listens to his various advisors, he was president for 4 years. He is far more confident now that he can do the job in a way that he was not in 2017. So I strongly suspect that he will, in the end, follow his own counsel and not necessarily listen to that of his advisors.
The challenge, though, as well, is that world leaders, autocrats or not, from democratic countries as well, they're familiar with how Trump operates. Do you think we get Trump 1.0, or do you think that this version is so radically different that it does become sort of destabilizing force that actually acts effectively, again, going back to the madman theory?
Right. The problem, as you say, is that the madman theory only works. Historically, it doesn't have a great track record, but to the extent that it does work, the only way it does work is if other leaders really believe that Trump is going to follow through on his threats. Now, there's a degree to which the idea that Trump will sanction his allies, that's entirely believable. And so it is likely that Trump's efforts at coercion might yield some modest successes with allies. The problem is that the countries that he really wants the big concessions from are the Chinas of the world. And as you say, they've seen this playbook before. And we've already seen a sort of escalating, tit for tat in terms of U.S. export controls and now Chinese export controls as a way to sort of, engage in what I think the New York Times referred to as supply chain warfare. So I think they've taken Donald Trump's measure. And this is where things get dangerous because, as you say, if other people don't believe that you're going to act as crazy as you're claiming, you then have one of two choices, and they're both unpalatable. One is that you back down, in which case you lose all credibility. The other is you actually have to follow through on some of these crazy threats, which can lead to a dangerous escalation of tensions. And my concern is that that's the choice, that's the unappetizing choice that Donald Trump might face 3 or 6 months from now.
Daniel, final question for you. Do you think he'll be able to end the war in Ukraine, and what does it mean for his relations with Europe?
Well, he said he was going to do this on day one, and, it's close to midnight in the States, so I suspect not. I think the problem with ending the war in Ukraine is that while I have no doubt that the Trump administration could pressure Ukraine into making concessions, the question is whether they could get Vladimir Putin and Russia to make similar concessions. And there, Russia's demonstrated absolutely zero inclination to make any kind of compromise. I think the best they could hope for would be some sort of frozen conflict. But Russia's not really displayed much of an interest until now in doing that. And it's worth remembering that, you know, the Russian Duma annexed the 4 provinces that Russia has troops in. And so by Russia's framing, they've legally annexed these territories. Any kind of ceasefire would have to recognize that Ukraine controls some of, you know, Russian sovereign territory, at least by Russia's own laws. And I suspect they're going to be unwilling to do that.
That was Daniel Drezner there, Distinguished Professor of International Politics at Tufts University. Thanks so much for joining us this evening, and we'll have plenty more ahead. This is Bloomberg.
I think you have a lot of people that would be interested in TikTok with the United States as a partner.
That was President Trump talking about the fate of TikTok earlier, saying the US should be able to own half of the social media app in the US. He's also ordered the Attorney General not to take any action for 75 days. Let's bring in our Bloomberg opinion columnist, Catherine Thorbecker in Tokyo. And Catherine, it's really becoming a sort of bargaining chip now between the US and China as it relates to tariffs as well. But how are you thinking about what we just heard about TikTok earlier?
Good morning, Annabelle. So I think 2 things. One is this isn't totally unexpected. You know, Trump did campaign on saving the app, and he has made some promises in recent days to extend this deadline. But at the same time, this is quite remarkable because it sort of goes above the law. You know, the courts, and most recently the Supreme Court, signaled that this law should be upheld. And, you know, Trump can grant an extension if ByteDance has shown that it's made headway in finding a buyer, which it doesn't, at least publicly, it hasn't shown that it's met that bar. So it's quite remarkable that Trump has gone through with this. And I think he's, you know, I have to give him credit for sort of trying to take this political win. You know, 170 million American users are watching this, and the app is very, very popular with young people in the U.S. So I think he's, you know, trying to position himself to take this political win. But at the same time, you know, I think we should remember how we got here, which was during Trump's first term. He was sort of the first one to call for a ban. And, you know, obviously the law passed under the Biden administration. But I think at this point, nothing is really certain. And I think that this still has a long way of playing out.
Okay, well, it's interesting, Catherine. You know, one of the things that the president mentioned as he was signing the executive orders and talking about in some instances other topics as well, was that TikTok is actually not their biggest problem. It's getting a lot of attention. I think to your point of your column today, that TikTok is not the biggest cyber threat. Just take us through the thinking there.
Right. So I think cybersecurity has historically been sort of a less sexy rallying point in Washington, but I think it's a far bigger threat than, say, TikTok propaganda if the U.S. and China were ever to engage in a conflict. You know, Chinese hackers or hackers ostensibly from China have been really lurking and embedding themselves in critical infrastructure, and they have the potential to, you know, bring aspects of American daily life to a screeching halt if they ever wanted to. And I think that we should really be taking these cybersecurity threats and these cyber espionage and all these hacking attacks that we've been seeing recently way more seriously. You know, it might not be as popular as, say, TikTok or even that Chinese spy balloon we saw that's been getting a lot of oxygen. But I think lawmakers really should double down on their cybersecurity efforts right now.
Can you share some more details there? Because, of course, you know, we've seen cyber campaigns also being waged by the U.S. side as well. But what China's doing, is this sort of an offensive policy, or is there a defensive one to it instead?
Right. So I think in the past, you know, we've seen cyber attacks from China. They're nothing new. And in the past, we've sort of seen them go after, you know, intellectual property at private companies or, you know, people's personal data or data related to political campaigns. But the past few months, we've really seen cyber attacks emanating from China really hitting sort of from all sides, everywhere, all at once. And I think that should really be a wake-up call for Washington that they're, you know, grossly unprepared here, you know, whether it's the Treasury Department, whether it's critical infrastructure in the U.S., or even, Janet Yellen's personal computer that was reportedly infiltrated. And I think that, the U.S. can never come out on top of a tech war with China if it can't keep these basic government devices or its own critical infrastructure safe from China cyber attacks.
Catherine, thank you. Catherine Thorbeck, our Bloomberg opinion columnist. Check out her column today, of course, live for us there out of Tokyo. Right, so to other things that Donald Trump has also signed into, as far as an executive orders, plural, quite plural, in fact, today. So one was to withdraw the U.S. from the World Health Organization, number one, and number two was to eliminate federal DEI requirements. To talk us through the details of those two projects, let's bring in Derek Wallbank, our news desk editor, our editor, to talk us through this detail. Derek, why don't we start with what he plans to do specifically with the WHO, or not do?
Well, David, it's an executive order that basically brings back a guidance that Donald Trump had in his first term to try and get out of the WHO. It's not we're out tomorrow. It's more here is a pathway to get out of the WHO. And this is just like one of many, many, as you said, executive actions that Trump took here. He had said he was going to do nearly 100. I haven't counted them up yet all today, but it feels like that, certainly. Included in there another, 75-day reprieve for TikTok, many other things to do with federal hiring, as you mentioned, not just on the DEI side, but also in terms of return to office. 5 days a week is going to be the standard across the federal government from here forward.
Yeah, and on that point as well, I mean, it's not just the WHO. You're also looking at a U.S. exit from the Paris Agreement, and that's the global pact to counter or combat climate change as well. So there's lots of international organizations that are being swept up in this, but domestically as well, it has been that big focus on, as you said, that peel back of various DEI initiatives. What does that look like really in practice?
Well, it looks initially kind of small, and I think it'll take a little while for it to fully get built out. The initial thing is anybody who had any title to do with DEI, all of those offices are scrapped. All of those job titles are basically scrapped. Any program that had the word equity in its name is probably going to be gone. There's going to be a review going on of pretty much everything that the federal government was doing on that front, and basically all of it is going to be terminated. So that's the start point. There's a larger thing at play here in terms of who the federal government hires, hiring targets. And it's very possible that you sit there and look, 2 and 3 years down the road, and the federal government could literally visually look quite different than it does now in terms of its workforce. But that's going to be a process that plays out over a significant period of time. The other thing I should mention on this is that Trump candidly has signaled that he doesn't want to hire a whole bunch of new people to the federal workforce. He signed a hiring freeze as a start that covers most of the government except for like the military and a couple of other things. And there is a plan that he wants federal officials to do to try and figure out ways to shrink the federal workforce, including through attrition. So you may not see too many new people coming in. You're trying to find a way out.
Yeah, in fact, Derek, just to pick up on that point, give us an update on, is it still pronounced DOGE, the Department of Government Efficiency, and really to bring down the costs of the federal government?
Yeah, and in fact, it's been interesting because that had started out as this like extra government thing, but now it appears that it's going to be a little bit more into the government, right? Elon Musk, is going to have a email address, and may have space near the White House to be able to sort of do things. There was a department that or an agency that was sort of set up by Barack Obama that's gotten renamed to include DOGE, and so there are ways that this is sort of embedding in there. Interestingly enough, Vivek Ramaswamy, who was supposed to be a co-leader of that, is not going to be joining the DOGE effort under the Trump administration. He was involved in the setup alongside Elon Musk, but he's not going to be there for the actual execution of this. That's stage one of, I guess, a two-stage plan. It's in the Chiron on your screen, but there are a lot of rumors swirling that Ramaswamy is heavily looking at his own bid for governor of Ohio. He said in his own message, stay tuned.
Yeah, it certainly doesn't seem to be someone that's looking to step back from the spotlight at all. No. But that was our news desk editor, Derek Warbank there. We'll have plenty more ahead. This is Bloomberg.
Welcome back. We're already feeling and seeing the market reaction to some of the executive orders that Donald Trump has put in place, the pullback in energy stocks, renewables, on the back of the pullback here from climate policies. Page number one, page number two. We've talked at length about some of the energy initiatives and the pullback there. And as you can see, we're pulling back across some of the sort of highly cyclical names we're seeing here, of course, in the Asia-Pacific belt.
Yeah, and that's sort of that play around sort of deregulation, or that's what Trump's focus would be, cutting the red tape. And if there's really any sector as well that sort of stands to benefit in the US, that's big tech. And you certainly saw that confluence of political power and Silicon Valley power converging together at the inauguration ceremony. Because I think if we've got any footage, you'll see the group of billionaires that were in the background. And Elon Musk is there, but you're seeing Sergey from Alphabet. We've got Jeff Bezos there, you can see as well, but Mark Zuckerberg was in attendance with his wife Priscilla. I mean, there was really a lot of wealth. Actually, I think they counted it at the Bloomberg team, and they're saying $1.3 trillion of cash was embracing Trump at his inauguration. So that is certainly, one of the most powerful factors that we see, and one of the most powerful forces that's really shaping Washington.
Deregulation, and I think they're all, if not all, but most of them are then headed to Davos, of course, where it brings to mind the conversation our colleague Francine Lacqua had with Meta yesterday, and the fact that Europe has not been able to produce a company that big, the U.S., because of all the regulation that's in place over in Europe.
That would be the argument, yes.
Right? Interesting enough, though, amid all the attention on Donald Trump, there's actually one story that's almost surpassing.
We had a bit of a chuckle at this one. The story as well, one of the most read today, is that Morgan Stanley is boosting their senior Asia banker bonuses by up to 40%. So, of course, it's bonus season for some, and it's still number one for some. Trump, definitely number one for a lot more people, though. More ahead.